What we're seeing an incredible amount of are refinances, those phone calls, because the Fed's going to be meeting here in the next few days. If you're watching this, we're at the 16th of September. If you're watching this after, there could be certain things that might apply to you. But I'm going to go through a blog post that I wrote here at ClaritaOpenHouses.com. So you'll get here, go to the top. This is going to be the thumbnail. Should you mortgage rates sink closer to the pivotal magic number, spurring refi calls? And I get this because a client had called and said that the lender that they had used to purchase the residence that I had just closed with them not too long ago is calling them. The Fed's not meeting for the next couple days. Maybe it's a precursory call to them maybe being put in a position to refinance. And if it's for educational purposes, waiting to see what the Fed's going to do, that's just lovely. And that's good. You should get that information that you need. If today the lender were to say, hey, rates have gone down, which they have from when they purchased, not as much as they're probably going to go down here in the next few weeks and after the next couple days, but would you like to refi? And if they were to say yes, and he were to lock them in and finish it and get it, well, not finish, but get it at least started today to the point of no return, even if rates drop lower, that would make me sad. And I don't know if that's the case, but it's just good information to know if you start to get phone calls that are talking about refining and you have purchased. A few things that I point out here in the blog article. Now, of course, here I've gone through what's going on with interest rates. I give some comparisons as well, some of the quotes from some of the biggies in the industry, looking at what they're looking at as far as interest rates go. And we can see with the limited inventory, if they happen to come down, it's going to be standing room only as far as real estate. But this gives you an idea where the interest rates are and what happens when those rates start to adjust at these figures here. Now, all interest rates, of course, are going to be very much dependent on your credit profile. I'm not a lender, I'm a realtor, but we interact with lenders all the time because the majority of the people that are coming to buy real estate have to finance it. So we should have that conversation with their real estate lender to make sure, well, number one, they're qualified, and if they're not qualified, how can they become qualified? And then take it from there and see if this is really what they want to do. But other than that, you can get all the numbers here, and I get to give you that rundown. Now, here in Santa Clarita, what we've done is we've seen that we have that limited inventory that the rest of the country is touting. We don't have a lot out there for sale, and the listings that do hit the market, they don't last very long. They get tied up in escrow 10 days, maybe 15. That time is starting to increase, not a lot, but it is. So I'll keep you posted on that front as well, if that's going to indicate a market change. But I just need more time before I can give you a good idea as to what's happening. Now, moving past that, there's a couple things. If the lender, you've been contacting from your lender and there's going to be a refinance, a couple things you might want to consider as I put in here. You know, how long have you had the loan? Is this a loan that you just didn't happen to refi? You've had it for 15 years. Now you're going to refinance it into another 30-year mortgage. In most circumstances, that wouldn't make a lot of sense because you only have 15 years left. How do you equate that additional 15 years to now have a full 30-year mortgage at a lower interest rate when if you were to just have kept paying at the previous interest rate, the costs might not have gotten even close to what this refinance is going to cost in the way of time, and that time equates to money. So there are several considerations on that front, but basic bare bones, if you don't have anything outside the realm of normalcy, then what'll end up happening is maybe you purchased last year or two, maybe when you did the interest rate was a little bit higher. When does it make it worth it for you? The rule of thumb generally could be a savings of 0.5 point or 0.5% in your rate. That's usually makes it worth it, but those numbers need to be looked at. They can say general rule of thumb, but maybe you have a particular type of mortgage. Maybe if you were to refi, it's going to create more financial burden on you. I don't know if that's going to be the case, but just because the lender that you used is calling, and maybe you didn't even like them, But just because they're calling saying to refi, okay, well, maybe that's going to spur off an idea that you might want to consider a refinance. But this blog post that I put together is going to give you some ideas as to what to look for. So those are a couple things. It's going to depend on how long you've had your current mortgage, because you're going to be starting over 30 more years. If you've only been paying a few months, probably not a big deal. If you're getting a half a point savings and you've only been paying on it 2 or 3 years, maybe that's okay as well, but it's going to depend on your long-term plan. Are you done in the next couple of years? You're going to be retiring. That looks like the way it's going to go, and you're going to leave and go to Idaho or Florida or somewhere else. If that's the case, then maybe a refinance wouldn't make sense at this time. You just have to see all the numbers, and yes, they cost money. You'll have to pay somebody to do it. In some circumstances, the bank that currently holds the mortgage, they might not be a bad option, but at the end of the day, games can be played by all. In some circumstances, I would probably almost rather go with somebody maybe I used in the past if they can at least match the rate that my current mortgage holder is promising me. And then, of course, look at those costs as well. This is what the refi boom is going to be. Lenders do a very good business at the time that rates do drop. It looks like here in the next couple of days that's going to happen. It's been rumored for a long time, but again, this looks like it might actually happen. I'll be able to call BS on myself or say it happened in the next couple of days, so I'll be talking to you tomorrow, I'm sure. Once it does, though, and if interest rates do come down, you're not going to have to hurry into anything. You can take a couple days to digest where you are and get good information from the lenders that you know. And if you don't know anybody or want to try to find someone else, give me a buzz. I'll be more than happy to run that interference for you, because I'm Connor with Honor. Have a great day. Thanks for watching this about refinancing. I think it'll at least give you an idea as to what questions you might want to ask, what these costs look like, and so on. I'm Connor McIver. Over and out.